Bloomberg today reporting that Tesla begins its Robotaxi service in Austin on the 12th of June. Now, of course, we'll have to just wait and see whether or not this reporting is accurate, but we do know Tesla did tell us that they will be launching their Robotaxis in June at some point. So whether it's going to be on Thursday, the 12th of June, we'll just have to wait and see. Over on the Bloomberg website, this launch date of the 12th of June is according to a person familiar with the matter. Isn't it always? However, the article continues, the previously unreported date was discussed internally and could still change, said the person. So I wouldn't go bet the farm on this date. The article continues, in preparation for the launch, the company this week operated a test vehicle on public roads in Austin with no one in the driver's seat for the first time, according to the same person who's leaking information to Bloomberg. Naughty, naughty. A Tesla engineer was riding in a passenger seat of a Model Y SUV, which drove autonomously with no remote operation, the person said. And you honestly couldn't script this any better. Today, my favourite man in a suit, Gary Black, writes this. Getting asked by a few followers today, posted on subscribers early this morning. Yesterday, we sold the remainder of our Tesla position at $358 per share. This is the first time since 2021 we have not owned Tesla. As in late November, which is the last time we reduced our Tesla position after Tesla's post-election run-up. We believe Tesla's valuation has become disconnected from underlying fundamentals. Gary states, their main concern, Tesla sells at a very high PE as earnings estimates continue to fall, driven by weak deliveries, and importantly, and honestly, mind-bogglingly, at least to me, but remember, I'm a deluded Tesla fanboy, what would I know? I obviously can't think clearly about this company. Quote, we believe the risk-reward associated with the Austin Robotaxi test remain asymmetrical to the downside. Remarkable. I'll get back to that in a moment. And finally, quote, we are concerned that the new, more affordable vehicle due out in July will be a stripped-down Model Y priced lower and funded by lower costs rather than a new form factor that expands total addressable market. And according to Gary, that increases the odds that 2025 estimates for vehicle deliveries decline further, risking a repeat of 23 to 24 when Tesla reduced EV prices supported by lower costs and Tesla saw little or no incremental volume growth. Gary then explains their future valuation for Tesla, discounted back to today, therefore Tesla worth $310 at present value, aka that's why they sold. Now look, you've got to give Gary credit for sticking to his guns, even though I strongly disagree with his reasoning. If I thought Tesla was just a car company, I would have never bought the stock in the first place, actually. Putting that to the side, if I actually thought there was meaningful asymmetric downside risk reward for the Robotaxi service launching, then I can understand. I don't. I mean, I'm still buying hand over fist. I'd be very curious to know, maybe Gary can let me know via the DMs or just post it publicly, how he come to the conclusion that the risk reward associated with the Austin Robotaxi launch / test is asymmetrical to the downside. This is, to me, really perplexing. The only possible thing I could come up with is maybe Gary and the folks managing the future fund think that if there's an accident or two, this could be a disaster for Tesla's brand. Otherwise, I'm having a very hard time understanding how there could be any meaningful downside. The risk reward is enormously asymmetrical to the upside. Let's think about this. Their existing Model Ys coming off production lines are capable of operating, so the capital cost is approximately zero. Start small. If the service works well, scale up from there. If it doesn't, cool. Don't scale as quickly. It's got over $30 billion of cash and investments. Software continues to improve over time. They have approval to launch this service. I mean, you'd have to be insane to think there'd be a lack of initial demand. There's going to be a fuckload of Tesla nerds who'd pay $50 a mile just to test this initially. So you're not going to have an issue finding customers. People, just for the novelty, will be willing to cop a high price and a long wait time initially just to try one of these new Tesla autonomous vehicles. The actual operational cost of these things relative to a taxi or Uber, it's no contest. It's going to be much cheaper to operate because you don't have to pay a driver, and it's an electric vehicle, and an electric vehicle with the most efficient drivetrain. Truly a massive head scratcher. I mean, I've been over the numbers before, right? If we round a little bit, a typical taxi full-time will do over 50,000 miles a year, but we'll round down to 50,000. Typical Uber fare, call it $2 a mile. If Tesla's charging $2 a mile and they don't have to pay a driver, which is a big deal, they could easily be making a profit of 25%, right? Which is 50 cents per mile. At full-time utilization, that's 50,000 miles and a profit of 50 cents per mile per full-time Tesla Robotaxi, e.g. a Model Y initially. $25,000 of profit per vehicle operating full-time. Now, you can argue, well, they won't make that much money initially or they won't do that many miles. Cool, but where's this asymmetric risk to the downside? If it costs Tesla, call it like $32,000, $33,000, $34,000, $35,000 to produce a Model Y and put it on the roads in Austin, and it only brings in a profit of $10,000 in year one, oh God, it could take over 3 years to pay back its entire cost. I'm having a hard time understanding the asymmetrical downside risk. The downside risk is almost zero relative to the scale of Tesla's business. Even if this was a train wreck of a disaster and they couldn't get it off the ground. I'm just not understanding. Actually, Gary's not understanding, but hey, I shouldn't say that out loud. He might get upset because it's true. But I did say that because it is true. Sorry, Gary. The other thing I want to get to was the idea that a more affordable, essentially stripped down Model Y would not expand Tesla's total addressable market. The way this is phrased, it seems to me that Gary's implying that Tesla would need to make a vehicle with a different form factor in order to increase their total addressable market, e.g. a vehicle that's a different shape. What's the most popular category of vehicle globally? Spoiler alert, SUV. But even if we did know that, what's the world's best-selling vehicle? That would be Tesla's Model Y today. You know why it's not selling even more? It's not because it's the shape it is, it's because it's the price it is. Of course, I don't know what I'm talking about, but here's a question to ask the audience. Maybe you guys can help me understand. Why doesn't Apple have a bunch of different iPhone form factors to massively expand their total addressable market? Why don't they make a square iPhone and a circular iPhone and a star-shaped iPhone? Just wondering. So to recap, apparently Tesla is launching their Robotaxi service in Austin in June on the 12th, motherfuckers. But who cares if it's the 12th or the 2nd or the 29th or July or August? Who cares if it launches? This is a big deal. With apparently asymmetrical downside risk reward. I mean, I really would love to hear a little bit more detail on how Gary has come to that conclusion. Now, again, you do have to give credit to Gary. He's sticking to his guns. I strongly disagree with his reasoning. Kind of embarrassing, to be honest, but I can't be a hater. If you actually think that there's massive downside risk reward, asymmetrical downside risk reward for the Robotaxi service launching on existing vehicles with existing software, I mean, I still don't understand that, but okay. If you think that's true, I can understand you'd be concerned. If you also think that meaningfully reducing the price of the world's best-selling vehicle by pulling out some of the premium and high-end features isn't going to increase the total addressable market, and you also think that Tesla's vehicle deliveries need to be growing year over year, otherwise it's the end of the world, and you really do think that Tesla's fair valuation today is $310, and you have a very short-term investment horizon that doesn't extend far enough to see any meaningful impact from autonomy, e.g. robotaxis or the humanoid robot, then hey, can't blame the guy. But you can roast the guy. And I do not believe this is going to age well. I mean, it might over the very short term, but imagine back in the day, iPhones announced. Analyst says there's asymmetrical downside risk reward with the iPhone. Apple stock is currently fairly valued. In fact, the stock's a little bit higher than its present value based on my DCF valuation, therefore selling my entire Apple position just before the iPhone launches. I wonder what Gary's going to do to promote his fund though, now that he can't be talking about his position in Tesla. Almost would have been worthwhile hanging on to just for marketing purposes, right? But then you might get in trouble in terms of securities, right? If you've got a fiduciary responsibility and you actually think there's a massive downside risk with the Robotaxi rollout, blah, blah, blah. Yeah. I wonder how X, at least based on my algorithm, is reacting to this. Let's read some of the comments, shall we? And the first thing I see is, are you fucking retarded? Next comment, very respectful. I mean, fair enough, you have your reasons. So yeah, I mean, respect to the guy for sticking to his guns. Some people suggesting that Gary might regret this, and Alessandra is here for the comments, as am I. Had to like that one. Some folks of the opinion Gary doesn't quite understand what's around the corner. An interesting question here from Jeff. Explain to me like I'm 12. Why wouldn't a stripped down Model Y expand total addressable market? That's a very good question, Jeff. I mean, why wouldn't a vehicle that today most people cannot afford be affordable by more people if it's more affordable? That is a good question. Clav writes, selling days away from Robotaxi launch. Welcome to the Hall of Fame club. Yeah, it is probably worth revisiting this in 5 years. It's going to be interesting to see how this one panned out. This is an interesting one. It's amazing you actually have been holding Tesla stock without believing Robotaxi as a major revenue source by 2030 or energy storage exceeding autos by 27 or 28. You must have been smoking something. And this is actually a relatively fair comment. I remember taking a peek at Gary's valuation model a couple of years back with shockingly high average selling prices on Tesla vehicles. And I mean shockingly high. At least 50%, maybe almost 100% higher than what I had for the same point in the future. Gary's assumption Tesla would continue to produce extremely premium priced vehicles as opposed to massively driving their cost down. That was a big head scratcher for me. I called this out at the time. Didn't make any sense to me. But it's hard to understand if you didn't think Tesla would continue to massively drive the cost of their vehicles down, which when they told us they're going to do that in a master plan nearly a decade ago. And you also didn't believe that Robotaxi would make a meaningful difference to Tesla financially anytime in your investment horizon. It's kind of hard to understand why anyone would own the stock in the first place. Overall, the general feedback on Gary's post here, apart from a few butthurt Tesla fanboys who are having some tantrums, most folks fairly respectful, pointing out that, look, if you think this is the right call based on Tesla being a car company, etc., then go for it, bro. And I completely agree. I saw that Sawyer Merritt posted this news to his very large audience. Let's have a look at some of these comments. I've got a funny feeling there's going to be a few more emotional Tesla fanboys losing their minds in the comments. Let's see. Farzad says that he predicts Gary is going to kick himself pretty badly. James Dowmer, shout out to James. He has a thesis and he's investing according to it. You have to respect the guy for putting his money where his mouth is, even if you think his thesis is wrong. On this point, completely agree. Another user here claiming that Gary's fund is a total rip-off, charges a 1% expense ratio and can't even outperform the market or get close to outperforming the market. Let's do a quick fact check, shall we? Future fund, all time since launching in August 2021, up 3.23%. I mean, it turns out managing money for people is not super easy, and outperforming the market even more challenging. Now, if I recall, the future fund has something close to 100 individual holdings. I checked this a little while ago. I was kind of amazed that you could keep track of that much stuff. Obviously, I have a very small brain. I could never do that. Well beyond my abilities, but let's just double check that. Full holdings, and let's have a look. How many different positions do we have here? Yeah, not too far off. Well, let's call it a little over 90. I'll tell you what, my brain is nowhere near big enough for that. Yeah, my notifications this morning were blowing up with things like this. A lot of people looking forward to this very video. How meta is this? Jesus Christ. Oh, man, there's some trolls in the comments here. Barbara here says, now isn't the time to be selling. This is actually a good one. It would be funny if all those things he says about deliveries come true, but the stock still goes up. Lars writes, his reasoning is sound. He just completely ignores Optimus and AI. Why? That's the reason I own Tesla, not their car business. Someone's speaking my language here. Quote, that's funny. I think the risk reward are asymmetrical to the upside in a huge way. On this, I absolutely agree. I mean, I really don't think people in general are understanding the possible upside for robotaxis and the humanoid robot. As I went over, the numbers are quite simple. You can use your own assumptions, but back of the envelope math is pretty easy, right? Assume they charge about $2 a mile, or pick your own fucking number, but that's comparable to an Uber or a taxi today, at least initially. Remember, they don't have to pay a driver, and they have the lowest operational cost of vehicles, any vehicle, because A, they're electric, very few moving parts, processes, low maintenance, and Tesla has the most efficient drivetrains, meaning the amount of energy required to move per mile is less, meaning it costs you literally less in energy per mile than any other vehicle. So imagine they make a mere 25% profit, 50 cents a mile, and imagine that they're doing a full-time taxi's worth of miles per year, 50, right? That's $25,000 a year in profit per full-time Tesla Robotaxi. If you have a mere 100,000 full-time Tesla Robotaxis operating, you're talking $2.5 billion a year in profits. And again, these are on very conservative assumptions. Now, someone would argue, oh, how do you know they're going to do 50,000 miles a year? I don't. You use your own numbers. What I'm doing here is explaining the asymmetrical upside potential. What about 1 million Tesla Robotaxis full-time? And I'm not saying it happens tomorrow, but they do already have over 7 million vehicles on roads. They're producing roughly 2 million vehicles a year. Cybercab and its production next year. 1 million of these things, we're talking $25 billion in annual profits. Never mind the humanoid robot. I mean, that to me sounds like massive asymmetrical upside. But I don't wear a suit, therefore, what would I know? One more. Selling it just before Robotaxi and Optimus, with some laughing emojis. And one more. Staying invested this long only to sell right before Robotaxis. I cannot understand Gary's, Jeremy's, or anyone's reason for staying in for 5 years when it was seemingly flat almost that entire time, right? To get completely out as Tesla is delivering. Now, I think I do know why this happened. A lot of folks were thinking Tesla is just a car company. And when Tesla's just a car company, business wasn't continuing to go vertically. Maybe had something to do with the futile, fascist, inhumane shutdowns during the scamdemic. And then the subsequently insane levels of financial stimulus resulting in massive interest rate hikes from approximately 0 to approximately 10 trillion % interest rates overnight. Far and away the biggest ever relative increase in interest rates, which directly affects people's ability to, for example, finance a vehicle. Plus, they just feel like they can't afford shit if interest rates are through the roof. If you thought Tesla was just a car company and you thought that it would just be a perfect smooth S-curve of increasing vehicle deliveries, and then that didn't happen, I could understand why people would sell. But I'm also confident enough to say that anyone who sold because of these reasons clearly had their eyes completely closed to what was happening with Tesla's AI. I mean, this is a true stunner, but here we are. This may go down as one of the all-time fumbles of a money manager. But full disclosure, I am a deluded Tesla fanboy. After all, the only stock I own is Tesla, which means I'm obviously extremely biased and can't think rationally, can't see reality. That's the only possible explanation for me having essentially bought nothing but Tesla stock hand over fist for almost a decade straight, continually revisiting, assessing, and going, oh, what's the future look like 10 years from now? Still a good deal? Any better opportunities I can see? Risk adjusted? No, I can't. I'll just buy more Tesla. That's the only possible reason that could have occurred, because I'm deluded. It's not at all possible that the reason the only stock I own is Tesla is because I see some massive opportunity there. It's not possible that the reason I'm all in on Tesla isn't because I'm deluded and can't see clearly, but because I'm not deluded and I can see clearly, right? Well, time will tell. And you better believe I'll be here to remind you how this ages 5-10 years from now. People continue to ask. I don't mention it that often, but it is well documented. I own a little over 0.00069% of Tesla. I'd like to own more, but there's only so much revenue I can generate from my secret OnlyFans accounts. Wishing Gary Black all the luck in the world with wherever he redeploys the capital acquired from selling the few thousand Tesla shares that his fund owned. Wow. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.